Stocks down just about 2.5% last week. The indices in Italy and France harder hit, both down around 5% following the European elections and some right-wing gains in the parliament. Question for you. Is this part of a long-term trend? Is this volatility just before the election? Is it something else?
I think it's tough to say at this point. Obviously, the European parliamentary elections threw up a few surprises. You've seen things across Europe. In Ireland, for instance, the left-wing party that had expected to make big gains didn't. And then, in France, obviously, the right-wing party kind of came out of nowhere, really, and kind of trounced the current government, forcing their hand into these current elections. So it's difficult to kind of see the patterns, but definitely there's some big changes afoot.
All right, a lot of changes. Also, another change, Citi downgrading Europe from overweight to neutral over the weekend, two big factors. And this was interesting. Heightened political risk and narrowing market leadership. I got to be honest, it sounds a little bit like the United States. For investors in the U.S., could this possibly be a warning? I mean, the fact that these are the factors, two things that we're experiencing here, how should U.S. investors that are even just looking at Europe, how should you view European stocks after this?
So I think you have to take it on balance. Obviously, there's some risks involved, and those have been kind of highlighted with these elections. The risk of some far right parties getting in. France is Europe's second largest economy, so the idea that a far right party can suddenly blow out a budget deficit is certainly concerning. But at the same time, there's a lot of positive catalysts in Europe as well. The ECB cut rates only a week and a half ago, and the trajectory seems to be working that way a little bit faster than it is in the US. So and the economy as well is improving off a low base. So I think, yes, there's some risks. Yes, there's some negatives, but there's also that positive macroeconomic outlook as well.
So positive macroeconomic outlooks, does that mean in your mind this is a buying opportunity, or right now is it maybe a wait and see to see how these things turn out?
I think certainly with some stocks, there's definitely a buying opportunity. If you've seen what's happened in France with the CAC index, and generally speaking with French stocks, some of them have been hammered in the last week, and our analysis has shown in areas like utilities, for instance, a lot of the selling has been overdone. If you look at the actual exposures of some of these utility companies and what the far right party have said they'll do, it doesn't quite match up, that people are kind of over discounting these stocks. You could say the same as well about some of the infrastructure names, Vinci, for instance. There's a fear there that they might nationalize toll roads, but some of these things seem a bit fanciful at the moment. It's not to say they couldn't happen, but based on what we know right now, the market seems to be pricing in quite a lot of negativity with a number of French stocks.
Okay, you gave us a list of 4 or 5-star stocks in Europe, not just French stocks. Kering, a luxury goods maker, Veolia, a utility, also 2 European banks, BNP Paribas and SocGen. Is there a theme? What makes these 4 or 5-star stocks, in your mind? Is there something that they have that can help them withstand some of this volatility? Is there some theme? I'm just kind of trying to get something for U.S. investors here to kind of put a foothold in when you're looking at European equities.
Indeed, indeed. So I think, look, the first thing to say is that it's, again, this theme of kind of a blunt overselling of stocks. So obviously the banks are kind of a proxy for the general economy, and then they got hammered quite quickly. I mentioned BNP Paribas there, for instance, but it's also some of these other companies as well. You've got Edenred, kind of a French restaurant payments company. And if you look at the exposure of a lot of these companies, and Kering as well, the owner of Gucci, if you look at their actual exposure to France as a country, it's quite small in the scheme of things. But because they're well-known French stocks, the market's kind of using this blunt instrument and selling them down quite heavily. So we think the underlying exposures and the strong business models, especially with the likes of Kering, are enough to actually get them through. And as a result, then we think they should rise over time from the kind of lows that we're seeing now.